Hello, everyone. I am Jeff Corman, mastermind behind the sniper entry methods that are provided with GMT, Get Money Takeover. And I want to cover something that a lot of people talk about, and they just they just give a lot of bad information. Um, the way I teach and the way that we break things down at GMT, Get Money Takeover, we don't teach the complicated extreme circumstance stuff that you don't need to know. Okay. We teach things that are super simple, super easy. That way people understand it, you get it, and you all of that irrelevant information, all of that fluff, that extra information that you don't need, we don't really focus on, and we don't teach or provide information on that. Okay. So let's talk about candlestick basics 101. Okay, that's what this lesson is going to be about. Purely what you need to know about candles. And when I touch on this first topic, a lot of people will be like, yep, he's right. Let's talk about it. When it comes to candles, all you need to know about candles, okay, the most important information is that you have a bull candle and a bear candle. You have two types of candles. That's it. You only have two types of candles. Super simple. Simplicity is what I do. Now, if you listen to other people, you got like five different kind of dojis. You got like four or five different kind of, I mean, we got what? Gravestone doji, hanging man doji, pin bars, and all of these different kind of dojis, right? And then, when it comes to these different moves that you get in the market, people will say different things, but we're not even going to get into that. Okay, we're just talking about candles today, and we're talking about candlestick basics 101, how to read price action purely based off of candles. We do not use indicators. We do not use indicators. Indicators are trash. They lag. They'll have you lose your account and blow your account time and time again. Okay. Indicators are trash, right? Price action. The candles are the indicators. The candles will tell you and give you all the information you need if you know how to decipher the data the candles are presenting as they print. Okay. All you need are candles. That's it. The candles are your indicator, right? That's the data you need. Okay, so two types of candles, right? We're not worried about the million dojis they have and all of this other stuff, and we're not worried about that. Okay, all we're worried about are simple things like two types of candles. You have a bull candle and a bear candle, depending on what color preference you like. Okay, for me, I love this light blue color because blue my favorite color, and then I like this red color just because I just like leaving it blue and red like it is. It kind of reminds me of cotton candy. It's like my cotton candy colors, okay? And this is the colors I choose, okay? My bull candles are going to be represented by what you see here, okay? This light blue color. And then you have my bear candles, okay, which is going to be represented by the red color that you see here. And so now when you're looking at this chart, you now know what the market is doing, okay? The market is giving you moves every single candle in regards to price, okay? Price is going to be along this right axis here on the chart, okay? And the time is along the lower axis of the chart, okay? So we got time at the bottom. We have the line numbers, which is representing price on the right side. And so these candles are going to give you movement on price, okay? We don't really care about the lateral, the time. We mostly care about the vertical. because we get paid whether we are buying or selling. And that brings me right into the next point on two types of candles. First type, right? You got your bull candle or your bear. Now you need to know how to decipher the two. Well, blue are my bull candles, red are my bear candles. So now we can look at, what do these candles mean? What are these candles telling us? Well, the blue candles, which are the bull candles, are representing the buyers. The red candles, which are your bear candles, are representing your sellers. So in the sense of understanding how the market works, you now know whether you are buying or selling a pair, whichever pair you're choosing to trade, based off of just what type of candles are printing in the market, since there are only two types, your buyers or your sellers candles. And so now that you have deciphered what you're going to trade, how you're going to place your order, whether it's a buy or a sell, you now look for, what is the market doing? Well, the candles tell you that as well. Now you know the trend. If the candles are going up, if the candles are rising, then the trend is bullish. You should be buying. You should be looking for your blue candles, your bull candles, and getting into a trade for a buy. If the market is going down, you should be looking to take a trade with the sellers in the market, because the trend is pushing down, because your red candles are going down or getting lower. So you should be taking a trade going to the downside because the market is bearish. So now we've just looked at a couple things just from these two types of candles. You don't get this type of information from a doji, from just random candles, all of these different patterns. Think about it. You have the evening star, morning star. How many times have you seen an evening star and then the market continues to go the opposite way? How many times have you seen a morning star and then the market continues to go the opposite way? Those are manipulated moves that are engineered by the market to entice sellers to trade the wrong way. And oh, by the way, we teach that as well on GMT Get Money Takeover, all right? So when it comes to the candles, don't worry about all of these patterns. It's super hard to learn all of those patterns. When I first started trading, that's what I was told. I was given this picture with like 40 different patterns on it. It was like 20 patterns for bearish and 20 patterns for bullish. And they were like, hey, learn these patterns, man, and you go learn how to trade and you'll be able to make money. Well, for one, it's hard to learn all of those different patterns. And that was just the candlestick patterns. I was given another deal for actual candlestick pattern formations, like the head and shoulders and all of these other teacups and all of these different things. And now it's like, okay, how do I learn all of these different candlestick patterns and then all of these different patterns that the market make with movements and things like that? And so, yeah, the wedge and all of that stuff, okay, trend lines, all of that stuff, you don't need none of that. All you need to understand right here, candlesticks, and you will get into the trades with little drawdown and have sniper entries, okay? So this is the first piece that I wanted to cover, okay? And we can see right here, I am on the 30-minute time frame, okay? This candle here is running, right? But it has not finished yet. It has not closed. It has not printed. this candle is still forming, right? And so there's about 2 minutes left on this actual candle before it closes, all right? And so that brings us into the next deal, okay? And so now that we look at just the two types of candles, okay, we got to break that down first. Now let's look at the characteristics of the candle. What makes up the candle, okay? So I'm going to leave this up here for a second before I delete it. That way for the people that enjoy taking notes, like myself, man, when I first started learning how to trade, I still have the notes that I took. I got a whole notebook full of notes. So, I mean, and then a lot of it was trash that I didn't even need. And so once I was able to decipher what's good, what's not, I end up throwing a lot of that crap away. But right here, man, this candlestick basis 101 that you guys are getting, this is essential to trading and what you need to be a price action trader. Okay, not indicators. Don't rely on that. It's garbage. You want to be a pure price action trader because candles do not lie. Once a candle print, the market cannot go back and change that candle. Once that candle prints and closes, the market cannot manipulate you because you know which way it's going. You know if it's going up or down. So if that bearish candle closes, you know the market's going down. They can't go back and change it. They can't create a wick and then go the other way. If that bull candle closes up, then you know the trend is up, the market is pushing up. They cannot go back and make that candle a wick. Okay, very important, man. Very important when it comes to candles, okay? So that's it right here, okay? Two types of candles, your bull candles, your bear candles. That's it. We don't care about dojis and hanging man dojis and all of this other stuff, okay? Your colors, whatever you prefer. If you want to use yellow and orange, whatever colors, that's fine. As long as you know what they represent, your buyers and your sellers, and they give you the trend, you're okay, right? So that's your two types of candles. Now let's go into the characteristics, okay, of a candle, okay? How a candle is made, okay? What a candle is, okay? Your candle is going to be a body, okay? You're going to have a body, and then you're going to have a high of the candle, and then you're going to have a low of the candle. Okay, the body of the candle, this is going to be your solid color. Okay, and this is what is going to create the box. Okay, the rectangle, whatever you want to call it. This is what's going to create it. The high of the candle, and then you have the low of the candle. Okay, so the high of the candle is going to tell you the highest point that price has reached. Okay, the highest point that price has reached during that time frame. Okay, during that time frame. And then the low of the candle is going to tell you the lowest point that price has reached during that time frame. Okay, and so now okay, so now that we got that out of the way about the candle itself, let's look at what else the high and the low will create, okay? When you have the body of the candle, okay, the top of the body to the high of the candle will create your wick, your top side wick. Okay. And so on this one, from the low of body to low is to your lowest point will create your wick. And so now when we think about it like this, okay, the body of the candle and then the highest point of the candle, the lowest point of the candle is going to be the end of that candle, okay? But from the top of the body to that highest point is going to create your wick. From the lowest point and the low of the body will create your downside wick, your bottom wick. And so if we look at a candle and we look at what we're talking about here with the body and the high and the low for the wicks, okay, that's going to get us into how price is moving, okay? Once we can decide how price is moving, we could trade. If we know price is moving from here to here, then we know we can get in for a buy because we know price is moving from here and making its way upward, okay? So now, vice versa, okay? If price is here and we see it's moving down, then we know that we need to take the sell because the movement of price is going down, okay? And we determine the movement of price by candles opening and closing because it's going to create a movement in the market, and that's going to let us know whether we are buying or whether we are selling, okay? So we have the body of the candle. The body is important because the body is telling you where the market was able to hold price. This is the actual movement where the market held price and it closed and printed a candle, creating a solid rectangle, a solid body, okay? So it gave you a full candle, not just, oh, price was here, and then when the candle closed, it made a wick and it closed down here, okay? A solid body is different. A solid body is saying, hey, price was here and price still is here. When you get these wicks, okay, like this right here, the wick is telling you, and I'm referring to this candle right here, okay, that is telling you price was here. Price was here, but it's not there anymore. Price later closed lower, okay, because that's the highest point. That's the top of the wick, okay, but it's not the close of that candle. And so for me, when I'm looking at candles and I'm reading candles, okay, the wicks will tell you where price decided to stop and come back down, or where price stopped and decided to go back up. Okay, so that's what the wicks are going to tell you. It's going to tell you that price was going up and then stopped during that candle time frame and came down. Or it's going to tell you that the market was going down during that candle time frame and then it decided to close and go upward. Okay, so the wicks are giving you, in a sense, when you're reading price action, a sign, a indication. Okay, again, the candles are your indicators of rejection. Okay, so the wicks are kind of telling you that's what rejection, you know, somewhat looks like from a wick standpoint. Okay, and so now let's dive into the movement of price using the candles. Okay, because the movement of price, again, from the open and the close, which are from the body of the candles, that's going to tell you the direction and the way price is moving based on the close of the candle from the open. Okay, so now I'm going to erase this. Let me leave this up here for a second for my note takers. Okay, and then I'm going to switch out this information with different information, and we're going to actually look at the candles on the chart, and we're going to follow price and the movement to see how to read price action based off of just candlestick basics 101, bull and bear candles, open and closing. Okay, super simple. Again, no indicator, no anything. You don't need all of that, right? Okay, so let's go ahead and delete some of this stuff. Right, and so now let's get this set up. Okay, so I want to use this right here. Okay, this is going to represent the open of the candle. Okay, so this is the beginning of the candle. Okay, candle open. And then this is going to represent the close of the candle. All right, so what we're going to look at is how these candles form and print in the market. Okay, and so if we look at, I'm going to pick a candle and let's look at this candle right here. Okay, so we can clearly see that where I pointed on this candle is the wick. Okay, and so we have the open of the candle. You have to go to the candle before in order to get the open. Okay, in order to get the open, you have to go to the candle before. So if we want the open of this candle, we have to go to the candle before, which is this one. Okay, this is the previous candle. And that's where the previous candle printed, the previous candle ended during that time frame. My time frame is the 30-minute time frame here on this chart. You could decide your own time frame, 15-minute, 30-minute, 1 hour, 4 hour daily. Okay, whatever time frame you select, each candle will represent that time frame. Once that time frame ends, once that time frame lapses, then at that point the next candle will begin printing. And so when this time frame ends, the next one begins right where the close of that candle occurred. It'll just shift over and make a new candle. And so there's the open right there. And then once that candle opened, we can see that the candle made a high, which is that wick there. And then the candle made a low, which is this wick here. And so now we can look at where did the candle close when that time frame was up. When that time frame ended, the candle closed here. And so now we have a open and then a close of that particular candle, that one candle that we're talking about. And then from the lowest point, which is here, to the lowest point of the body is going to give us our wick to the downside. And then our top side, high to the top of the body, is going to give us our wick to the top side. Okay. And so now I'm going to use a bigger candle where it'll be a lot easier to see what's going on. Okay. But I wanted to just pick one first, kind of in the middle of everything. Then we'll go and I'll pick a nice one like this one right here. Very nice candle. Okay. So now let's check this candle out. Okay. Price moves from left to right. This is the previous candle right here. Okay. Previous close should begin next candle open. And so we are looking at this candle here. This is the body of the candle. We have the open of the candle right here. We have the close of the candle right here. And then we have the lowest point of the candle right here. And then we have the highest point of the candle right here. And so from the top of the body to here, it's going to be our wick. And then from the bottom of the body to the lowest point is going to be our wick. And so now we have just looked at this one candle, and we have just looked at how to read price action. Now remember, earlier on, I was talking about wicks, and we do not care about dojis. This is a prime example of why you do not trade dojis. Look at this extremely long wick. When people see this, you know what people are thinking? When they see this super long wick that I'm talking about and referring to right here, okay, when they see that, they are going to buy, because they look at that and they say, oh man, look at that long wick, it's gonna go up. Let me jump in for a buy. Don't do that. Look at which way the market went. The market clearly went down. Okay, it is better to trade and to go with candles that close rather than wick. Okay, candles that close rather than wick. Look at this candle that closes to the downside. which direction does the market go? Okay. It goes in the direction that price closes, that candles print. When candles print, remember, the market cannot take that back. So once this candle prints, the market cannot take it back. So they continue going down. Okay. When you have a wick, meaning that candle did not print, the market was not stable to hold price in that direction. That's why you got a wick and it goes the opposite way. But when the candle closes, price was able to maintain and hold that particular price line number, that level, and that movement was warranted in the market. And that's why it stayed and price continued to drop and the market moved to the downside. Very crucial when it comes to the body, okay, of a candle. Okay, this is the hold of price in the market. Okay, when you see the body of a candle like that, that's price being able to hold in the market because that candle was solid. Okay, and so now we got these wicks here and we just deciphered our candle. Okay, we just deciphered our candle. We got the body of our candle, we got our wicks at the top and at the bottom of the body, and then we have our high and our low of the candle. So you have just done the open, close of the candle, the high, low of the candle, the wicks, and the body. That's everything you need to know about candles, basics. That's all you need to know, okay, covered in a nutshell right there. Remember, we get paid off the movement in the market. So we want to see movement because that's how we get paid. This one candle here, okay, in reference that we're dissecting, if we count the pips on this one candle, just from the open to the close, depending on your broker, some brokers, it'll be 125.9 pips. Other people, it'll be 1,259 pips. Okay, depending on your broker, because some brokers count points as a per pip. Other brokers count points and divert them into pips where you divide it by 10. And I'll do another video how to count pips and points and all of that good stuff with indices, gold, and forex pairs. All right, but for right now, this is 1,259 pip move or 125.9 pip move in 30 minutes. Okay, this is how we trade at Get Money Takeover. We get sniper entries that give us the precise line number to trade and enter with small risk. And then that way, when we get this large, this is what you would call a shift in the market, okay? This is why it's important to look at the body of the candles because that's going to give you the shift in the market. If you know which way the market is shifting, then you know what to trade. If it is shifting up, then clearly buying. If it is shifting down, then you're clearly selling. Super simple, okay? Ladies and gents, okay? Super simple. So many people make trading hard. It does not have to be. They make it complicated by trying to teach all of these various things to make themselves sound intelligent or like they know what they're talking about. You don't need to know all of that. All we looked at were the basics on candles. And right now, you could practice this, you could get this down, and you could actually start trading and making money just with this information that you got from this one simple video on the candlestick basics. I haven't even gotten into the sauce yet. This is just sauce for candlestick basics 101. Guys, so this is going to wrap up this video on Candlestick Basics 101 from Get Money Takeover. And as you can see, what we've talked about, wicks, the body, the actual printing of the candle, giving you your shift. And if it's shifting up or down, now you know the trend you can buy or sell. This is power. Okay, you're learning some great stuff and there's more to come. All right, so please subscribe, stay tuned, and we'll give you more fire to build up your trading arsenal. Also, check us out, our website. It's in the description. View us, check us out. If you want to subscribe. We do live trainings. We do everything you need. Live trainings per week. We conduct 3 live trainings during the week, 1 on the weekend, Saturday mornings. We also do 3 live trading sessions where I come on, I actually give my trades, my setups that I'm taking for the day. This week, we have bagged over, and this is counting pips as actual pips, not pips and points. This is actual pips. Actual pips, we are over, I would say 800 pips for this week. No losses, by the way, 100%. Today is Thursday. We started trading Monday morning, okay? And so we are pretty much done for the week. We're up over 800 pips for the week. Beautiful week, lots of profits, ton of profits. So, I mean, yeah, it's good over here on GMT land. So this is gonna wrap up this video. Thanks for watching. Okay, subscribe, check out the website. If you wanna go ahead and join our organization, you can get started learning how to trade raw price action, real beef meat that is given, okay? No fillers. You're gonna learn how to really trade institutional concepts, raw price action with Get Money Takeover. Thanks for watching. You all have a nice day.